Hi there and welcome back. It's the most wonderful time of the week again, where I come back and talk about the trades I made this week. I'm already laughing because it's the same thing as the previous weeks. I was gonna say it was a tough one for me, but I will be lying if I said it was. And I'm gonna explain that just right away. Starting on Tuesday, we had a signature in price that I have seen a lot of times. We had already taken the liquidity on the left side, right here, on the CPI candle. But when we see a movement so big as this one, which was the CPI move, which was 150 points, that doesn't care about anything, usually what we do is we wait for us to tap the 50%, sweep some sort of liquidity inside of it, and then inverse it to the upside. And right here it was exactly what happened. We tapped the 50%, we accumulated for a bit, we manipulated down, we came back up and made a change in the state of delivery to the upside, and we inversed this fair value gap on the left, which, as you can see right there on the 1 minute, it didn't have inverse right there. As the model I trade, it would be a invalid trade because we already took the swing high above it. But if we go back to the 3 minute, we see that we have inversed this fair value gap, and on a 2 minute, exactly the same thing. Because I noticed that we had inversed the 2 in the 3 minute, when I saw that we were holding the upside of this fair value gap, I understood that the market, because we also already have the change in the state of delivery and my draw on liquidity is up there, I understood that the market may not wait for me, and I entered earlier. So I entered on this candle, this was my stop loss, and my TP was right there. This was going to be a really nice trade, but the market decided to edge me, as it did for a lot of people, and just left liquidity for another day, which is normal, it's okay. Zooming out to the second trade I took on Tuesday, we see that because it was around here, we had an SMT with ES with these lows. Zooming now back on the 1 minute, we had this really decent, with momentum, inversion fair value gap. And when I looked at this, I thought, okay, this isn't the best price action because we are not leaving 1 minute fair value gaps, it's just kind of going down with weakness. But I knew we had an SMT. We were still holding this fair value gap on the left besides the 15 minute. We left liquidity above. And if we zoom on a 30 second, we see that we have this really decent, low resistance liquidity. And when I saw the momentum going up here, I entered the trade. And as you can see, this was a quick loss to me. Now, I can blame this 30-second BPR, which is significant, but because we had already inversed the 1 minute and we had this momentum and our bias was above, I think this was still a good trade. We had delivery, we had momentum, we had low resistance liquidity, we had liquidity above, we had a good bias. This wasn't just the best day, it was a difficult day because this trade already missed. This one did the same, and the market just headed down. We had some other trades. We had this one, which I didn't enter because the sweep wasn't the best. And at the end of the day, while I was having dinner, we had this one, which it's really good. It's a 2R. It was a really decent move, and I would probably have taken this. But now forward to Wednesday, I didn't have the best bias because when I came on the market, I saw that we had left these relatively equal highs right here, which look really nice. But we also came down with a lot of momentum. We inversed this 15 minute on the left with a lot of momentum. And below here, we had a lot of low resistance liquidity on the higher time frame. I was waiting for some sort of confirmation. If we held this 1 minute to the downside and we had a good setup, I will take a short to the hand of this LRLR. If not, if we inverse this 1 hour to the upside, I will target this buy side liquidity. We are still holding this 1 hour. We inversed this 15-minute here on the left, and on open we took this sell side liquidity and went up. And I thought to myself, okay, I just missed this trade because this will probably rip to the upside, at least to this high. This was a plus setup, a lot of momentum, a sweep of the sell side liquidity. This is great. But when this took all these highs, respected this 5-minute here on the left, and inversed like it doesn't care about any of these fair value gaps, inversed this fair value gap, inversed this BPR. When we inverse this right here, I enter the trade around here, put my stop loss above the fair value gap, and I targeted the end of this whole liquidity, because if we go on the 15-minute, we see that the end of this range, it's this low, and the end of the LRLR, it's this one. But I didn't decide to target really the end of it, because this low is a lot on the left of the market, and I thought that we could take this one, rebalance, and then take the other one, which is exactly what happened. And zooming back on the 1 minute, we see that right here, this candle, this big candle, it's the 10 a.m. news. We took this liquidity on the left and we just bursted down, and I closed my position here when I saw that this was just bursting. And the problem is that if we now go forward to Thursday, during the night on Asia, we consolidated, but during London, we bursted 400 points. We took this liquidity on the left side. We just stayed right here. We didn't went above it, retested it, and went back above it. We didn't came back, retested it, and then go down. We just stayed in this range, which is really bad price delivery. And because we had already expanded 400 points on London session, it is normal that after expansion, distribution, it comes accumulation or consolidation. So it is a good decision not to trade on days when we expand a lot. Now, zooming in on the 1 minute, I didn't really have an option to lose because none of these trades were decent. I was waiting for us to take some sort of liquidity below and then go up, but we were just leaving high resistance liquidity, which just means that we already took the liquidity on the left, we already took the external liquidity that I just showed, we already took the internal liquidity, and this isn't even tradable. But now if we zoom out on a 5 minute, we see this one. We have an SMT with ES. We didn't tap the 15 minute, but we did tap the 4 hour. Now, taking a trade from the 4 hour to the 5 minute may be too zoomed in, but I took it the same way. We had a lot of momentum, something that I wasn't expecting. And to myself, this was accumulation, manipulation, distribution to the upside. And that's okay. I was targeting this high. This, to me, all this range looked like a market maker buy model. And when we inversed it, I forgot to consider that we were already too high on this range. We are above the 50% and we were too high on the day. I still took this trade. This has a lot of mistakes. Targeting that high after a 400 point move isn't really realistic. But the problem here is that we took this high, and usually right here I go break even. But because I thought this was a really good market maker buy model, I didn't. But what I should have done was that when I understood that we took this high on the left, took it again, and took it again, when I saw that we were making a 3 candle pattern without having a lot of momentum, because on the beginning we had a lot of momentum and then it just died off, this is a sign to go break even. It's a sign that says the market, it's weak, it doesn't want to go up. But I didn't. I had a lot of trust on these highs and I took this loss. This was the stop loss, but when we made this swing low, I put my stop loss below the swing low, and as you can see, when we took it, we headed down to my original stop loss, which would be a greater loss, and I mitigated the loss, which just meant that I had 2 losses on the week and 1 win, and I ended up break even. And that's all I have to say for this week. We'll do better on the next one. I'll see you. Thank you. Bye bye.